Good morning, traders. Welcome to the Traders Lab. I am your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory, using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab, as well as a library of webinars and the Trader Lab community. The Trader Lab community is a group of like-minded traders that come together to leverage their collective experience. It's about building out the business side of trading, understanding the business of trading, what it is and also what it isn't, and dealing with the typical obstacles that we all face as we develop this craft and potentially careers. It is not what most of us think it is. It's really quite different since we can't really relate to this environment because we've never been in it before. And the fact that you're in it now, assuming you are and you've been trading, or whether you're a new developing trader or you've got a lot of time in, if you don't have a sustainable process, you're still possibly not yet fully integrating this business versus what you think it is. And there is typically a large gap between the actual business and then also what we believe it to be. And I think, at least from my experiences, we typically try to solve the issue or the problem of trading based on what we know from our exterior experience, outside world. But imagine if you landed on a different planet, with the oxygen or the gravity, the forces that operate in that environment be the same as here on Earth. I know, apologies for the, but it's really different. So we can't make this environment fit the environment that we're used to, where we've been successful. We really need to be adapting ourselves to the current environment or the trading environment, which is nothing like we've experienced for most of us, or almost probably all of us, unless, of course, you've taken the trip to Mars. And if you haven't been to Mars, then you may still think you're on Earth, but we're not. For analogy, forgive me. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only, and it is based on structured trades that are available to all of you in the Bookmap Discord Trader Lab community. So what are we going to talk about today? Well, new all-time highs and potentially, and I only can say maybe the all-time high for a while. If not, and I can't, it's not for me to say it is. I'm going to say maybe. The best you have in trading is maybe. Maybe we're done. Maybe we've reached the extreme. Currently, we have an outside day. We have a new all-time high, an outside day, and long liquidation. In the Trader Lab this morning, one of the things we talk about, of course, in Trader Lab is behavior. Retail trader behavior, investor behavior, and based on the way markets and behaviors tend to operate, we anticipated initially, well, first of all, the first part of the plan today was get long, okay, and then responsive selling. Now, what's the difference? You get initiators or new buyers. So initially, we were initiative and out of balance. A balance means we're out. In other words, a gap, and oh my goodness. And then what happens on a Friday? Well, maybe, and the thing about the maybe in trading is we don't know if, when, where, we don't know it, but we can anticipate behavior. Then we have to have benchmarks, if you will, or structure, however we define this, whatever that is, to define change. And for everybody, it's different. There are some traders who only trade with the advancing side. There are other traders who will fade it and take what we might call a counter trend trade at the time. Subject to your plan, you can do either. Depending where you are in your learning curve, it might make more sense that you trade with the advancing side. and not take the counter trend trades until you develop an edge with the dominant side. And then if the dominant side changes, you kind of reconfigure, and I always refer to it as turning the barge around. You can now get aligned with the shorts, and then you take your shorts. But you're still trading in alignment with the dominant side at the time, and you're not fading. You're using the counter trend triggers, if you will, not to fade, but for trade management. And that certainly changes it, doesn't it? So that's when you're developing. It's one way to approach it. The other thing is, when you're a developing trader, this is all about the metrics. It's not about, it's not a video game. It's really important to know that this is business. So when we're approaching this like a business, it's not one trade. It's not the big one. You know, it's like the big fish that got away. No, it's all the fishes. It's not the one. It's all of them. And we miss all kinds of stuff because if it doesn't fit our plan, our job is not to do it. You know, if we do it, that's FOMO, and ultimately that's the kind of thing that'll take you out of the business. By the way, the structured trades look something like this. I'm not a, not a vendor. This is just years ago, traders were asking me what I was doing, so I threw some things together. But you can use these to grab ideas, and then, of course, come to the Trader Lab community and see how other traders have implemented these. And it's not plug and play. I know we're all disappointed. You know, give me the plug and play and move the ATM in the basement. Unfortunately, as you probably know, unless you've never traded before, it doesn't work that way. So, what is this? By the way, if you're a Bookmap subscriber, even if you're not a Bookmap subscriber, you can participate in this. A picture of your favorite trading companion, you know, so if you have a lizard or something running around, that'd be interesting, sitting at your workstation, you know, with a picture of with Bookmap in the background, or, you know, anything, you can submit it. And you just submit it using the hashtag BookmapPets. It's good for this month. So you have all month. You can get a free month of Global Plus, which is I think, a pretty nice little thing. And if you've never had Bookmap before, and if you win, you get a free month of Global Plus. And just so you know, there is also a free digital version that's available at bookmap.com. If you want to, you know, play around with Bookmap, you can kind of, you know, see what's going on with it. Post this hashtag BookmapPets, go, you know, X, LinkedIn, Instagram, and there you go. You're automatically entered. Nothing else to do. Now let's get on to the business of trading. This is the day before yesterday. Now, if you follow this, this was an important event, 64.26. This is the retail price or highest volume from this day. That was the low of this day before yesterday. This price, 50, is the retail price from this day. So highest volume, highest volume. So the idea of this thing is that if we find a price that's either too high or too low, then if we test it and we find too low, then the market's going to look for too high. Where's too high? Well, nice. Who knows? So now we have this retail price. Now, the other part about this is, well, I'll show you this. So anyway, this is the day before yesterday. So we had 70, and this was our target for yesterday. Now, when I say target, what I'm talking about is fuel. And now I use the term fuel for stops. So if we have shorts, and this was a short, this day was a short, and it was all set up here in the ETH. And if you go back in the streams, you'll see it. It's in there. I think it was trading or anticipating new all-time highs. I think it was this and then fading it. But you can go back and it's all on YouTube. They're worth looking at. So this is where the fuel was. And yesterday, the next target up was 17 quarter, new all-time highs. So, but for me, the primary objective was to get into this. Now, and the reason, so you understand, and I'll show it to you, was if I get buy stops, which become market orders, and I don't get new buying above it, then we can come back. Okay? So that's why this was primary. And then if I get new buying, then I can go there. It's a sequential process. Now let's take a look, go a little further. So this is, again, too low. This is yesterday. We opened higher and we tested into this range. This is called the value area. And it's a valid value areas where 70% of the volume took place day before yesterday. So this was our support, but we have another level. It's called value area high. And it had, I think, a 75%-ish probability. I don't remember. So this setup, so we had longs, we had some very short-term counter trend shorts subject to your plan, but only long trades. And this is called a trend day. Now let's look at the structure. Once we got going, this is a target. This was a target. This is narrated in yesterday's stream. And then this is your next target, 17. And then after that, clueless. Now we have 65.11 is our retail price from yesterday, but no value. What is value? This has value. When you look at this, and I'm going to show you what it looks like on a profile, you see, I'm going to explain what this is. Now let's come back. Hopefully, where am I here? Yeah. This is that low of the day where it tested the retail price. Okay, too low. This is yesterday. We tested this value area high, and we could have come here. Nobody knows. You know, this is part of the thrill. And off we went. So we have the 71 area, this, and once we clear that, then we had that. So you see where let me come back. Oop, up to the cat. There, you see, 65.17 was the next target after this high. Now let's come back and look. There it is, right? So now there's another piece. So far, so good, guys. How we doing? If you're visiting in YouTube, hope we're doing okay. If you're in Discord, thanks for visiting Trader Lab. Thanks for being part of the Trader Lab. You guys following, and how we doing in YouTube? Sweet PS fires at 6487. All right, please give a like, by the way. Now I gotta explain something to you. What is the difference between this, or this, and this? What makes this a trend day, and what is this? Let me show you the difference. And this is the kind of stuff that you'd learn about in Trader Lab. All days are not considered equal. Different day type configurations have different trade plans. Now that may blow your mind. And the thing about it is that as developing retail traders, I'm doing this 46 years. I am a developing retail trader. You're never going to stop developing until you don't trade anymore, but hopefully that doesn't happen. So I'm always developing, always thinking about it. So let's look at this. This is the retail price from this day, okay? And we closed up here. So this is where the high volume is. That's retail. If I come down here and it's too low, in other words, what used to be fair retail, like in your store, if I come back and check the price and now you can't buy it here anymore, what's the market going to do? Potentially. And I got to always say potentially because it's all you got in this business. It's going to go up. Now let's look at the structure. You see how this rotates here? This is what a rotation looks like. And it's called a distribution. Now I am going to get today's trades, but if you don't understand how the market works, then we're all wasting our time here. Because my objective and what the objective of Trader Lab is to help you develop the business of trading, understand how the market works, why it does what it does, how to get in alignment, and then do something about it with structured trades that have a statistical edge. Build the business. If you don't understand how the market works, I believe you're going to be at a substantial disadvantage for sustainability. So this is called an auction or a consolidation or a distribution. It's a distribution of volume. So volume profile is what's too high, what's too low, and retail. That was retail here. Too low, hasta la vista. Now, what do we think of this? Too high, too low, too high, too low. This high volume sticking out right there, high volume node, is the same as that as far as what it means. So think of Russian dolls, fractals, or a vertical integration of time frames. For the RTH on this day, this was the highest volume. That's it. Okay. Too low, you can't buy it. Then the market starts checking. Is this really too low? Yeah, but that's too high. And what do we think about this? Well, this high volume is a shorter time frame of that. If this is too low, I'm going to leave it. If I do the what do you think over here, and this is too low in a shorter time frame, I'm going to leave it. If I break away from this and it's too low, I'm going to do the same thing up here. You see how it operates? And now the high volume is here. That's my retail price. And then I come up here and I have this one. And that high volume is my retail price. And this is called the value area, 70% of the volume. So when I open and then I come down in here, I can come here, I can test in here. And if I find my buyers, since what do I know? Market's going up, market is going up. This is resistance. The market came down here. You see the volume. That was support. Gap below it. Hasta la vista. Went down, then came all the way up. You see how it kind of fits? So this is the long. Now, I'm going to show you the difference. Then I'm going to move on. The difference here between this, you see how this is balanced? In other words, too low, too high, too low, too high. Yawn, except you can trade outside in, outside in. This is called mean reversion. Now let's look at this day. What's different about it? There's my high volumes. So I rotate too low. I'm up here, rotate too low. Rotate too low. And then I break away. And now we go into overdrive. These are called singles or low volume nodes. In the profile world, a low volume node is an outside edge of what's called a distribution. And the reason, what makes this different than a typical outside edge, like you saw down here, low volume node, because it's like resistance, buying dried up there, selling dried up down there. So you get those edges. And then the high volume is in the middle. But if we get directional, what happens is we can do one of these and then rush away. Do another one, rush away, and it leaves something called a single. Now the difference, they're very similar. Low volume node and the single are very similar. The difference with a single is these are half-hour brackets or TPOs from market profile days, and basically it's like a half-hour candle. Just think of it that way, or bar. I learned bar charts before we had candles. So it's a half-hour time frame. If you don't come back and test the edge or the previous high of a 30-minute something, then there's urgency. The market's not coming back. There's that, and those are called singles. This suggests the trend configuration. In a trend configuration, there's no value area. The market couldn't figure out. It's going, I don't know what this is worth. Oh my goodness. Whereas over here, we have a value area. So there's no value. And the volume point of control, the highest volume price from yesterday closes is here at 65.11 retail price. The fact the market closed here, this is the highest volume. And why did it stop here? We ran out of time. I'm sorry, guys. Time to close the market. We're out of here. Okay. So what does that do for us? It suggests unfinished higher. Not a recommendation, and everybody's clueless. Now I'm going to show you the something I wanted to show you here. We had a big report, NFP, right? Now these singles that I just pointed out to you are here on my chart. This is that high volume from that close that I just showed you yesterday. So the retail unfinished, okay? Settlement is right up here. And yesterday's high is there, okay? So yesterday's high, no value, retail price, settlement, and singles, and ETH low down here, which didn't happen yet. This is the NFP. Now I want to show you how I use this. Now, what I'm showing you is advanced. And all I'm showing you is how do you structure, not how to trade this. This is not where you trade. Developing traders, if you don't have a specific trade plan for reports, you don't have a trade. And you never have to trade these things. There's no reason for you to take that kind of risk. These are outsized risks. So, because again, who knows? Now, what about this 04? Right? Where'd that come from? Here. Now, there's no precision in this, right? 1 second. Gotta do something here. Okay. So the 04 is this outside edge. And when you have velocity, there's nothing to do. Now, here's a concept for you to think about. How does the market work? The market goes up to go down and goes down to go up. If you've got long sitting in the market and you have a big report, it is possible, depending on, anything can happen, right? If we come back inside the range over here, yesterday's range, we'll get some stops out. Then what happens? Where does it stop? The thrill of this is nobody knows. So let's not worry about it. But if you're adept at this, this is a trigger. Now I'm going to show it to you only, and the only reason I'm showing it to you is that you can see location and nobody knows. I also was looking at the full session. Well, hold on. That's not, let me just look here. Okay. Sorry about that. That wasn't there. Is this. So right here, notice, let's look at some structure very quickly, and then I want to move on. Chop, chop, chop is that consolidation. Buyers are here, sellers are here. Just as an example, if I break, this is now resistance, too high. I come down here, sellers are in control, chop, chop, chop. If I break this, I'm going lower. As far as I know, it's going lower. Do you see any buyers? Now, watch. Here, I have high volume. So right here, there's a potential change in behavior. Could have been here, didn't happen here. This would be a target coming down if I was short. And then the trade would be done, And then it's what happens here. If we can't get above this, then we're going south of the border. Don't know. This is microstructure. There's your high volume. Break high is a potential trigger. No clue. Let's remember, everybody's clueless. What do I have? Location. It could just as well keep going. Let's not forget that. This is just the way the world of trading is. It's maybe. So maybe if I have a change and I have resistance here now. Okay, so too high, too low. Don't know. Break high, trigger. And now this is my support. Now, right here, no clue. I'm just sitting here with my jaw on the ground like everybody else. But look at the change. Now, I get a buy sweep. This suggests counter rotation. This is how sweeps, icebergs, and everything else sets up. So where's my support? There's two places. Let me show it to you. I'm just doing this, and I'm going to remove this stuff. I just want to give you something to think about. Thinking is good, I think. So this is where the sellers were. This is where the micro high volume structure is. This is like your volume point of control. Those high volume nodes I've been showing you. Same in a fractal or in a vertical integration of multiple time frames. Think Matryoshka dolls. They're inside each other. So this is too low. This is too high. Resistance is here. This is resistance. Sweep suggests counter rotation. So now you're going to be looking for it to pull back and into an area and then continue, or this is going to fail. So let's look. What we have is sellers here, buyers here, retail price. 1 second. Support here, and support can also be here. Now, subject to your experience, and this. So here's what this does. This says counter rotation down. Bell sweep says potential for rotation up. So the idea is counter rotation down, and then this is the last sweep. If it comes to an area, you can get long. If it doesn't come to your area, you have no trade. Microstructure now is here. This is not a trade anybody ought to take. Overnight volume point of control. This is your retail price from the ETH. If it's too high, we're going to bounce off it. If it's too low, we're going to continue back in the direction of the quote trend, which is up. Reports are separate plans, and then whatever it does, it does. I'm not going to go any further into that, but then you're looking for higher. VPOC migration, I think. Let me just make sure I've got everything correct here. I'm sorry, 8:30. RTH open. Okay. Sorry about this, guys. It's just been a very hectic trading morning. Tied up with some things, if you can imagine. So let's come to the RTH right here. So now and this is something that's important for you guys to think about. If you have new all-time highs, there's a couple of things. One, you're going to get breakout buyers and you're going to get FOMO buyers. You also may have what's called a gap and go and just keep going. Always possible. The next piece is if you gap, the possibility is if it's going to be a continuation, you can pick the stops from those early buyers at the opening swing low and then continue higher, or everybody jumps out the window together. It's Friday, so part of the anticipation, and not expectation, I use my word very carefully. I don't expect anything. I anticipate potential. That's it. That's all you got here. We anticipate. And then if it shows up, we already know what we're going to do. So if we pick the opening swing low and all we're taking out is the weak buyers, the early buyers, and then we get absorption, we might take a long once one of our structured trades shows up for continuation up with the dominant side. So that would set up longs for us. So the possibility is gap, go, never look back. Gap, go, rotate, pick the stops, continue higher. Then responsive selling. In other words, hey, it's the weekend, I'm getting out of here. I'll send you a postcard, and then we're out. And that's that. Then if you get your responsive selling, which is anticipated but not predicted, right? Then you turn the barge around and only trade shorts. And that's been the current scenario here since the failure. And I'll talk about that. Now, if you have questions, post them. And we'll go from there. Are we doing all right, guys? How are we doing in YouTube? And how are we doing in the Bookmap Discord Trader Lab community? Everybody conscious? And how are we doing today? If you have a structured trade plan and you stick to it and you have vetted it and you have a statistical edge, in my mind, if you manage your emotional states, you'll be having a really nice day. And it doesn't matter about the stops. Everybody takes them. So we got to get over how we feel. So let's talk about the open. And again, these are structured trades. I try to keep this simple. Trading is difficult, but not complicated. Doesn't that sound like, really? It's difficult, but it's not difficult because you can't learn how to trade. Trading is simple. What is difficult is operating in a random environment when you've got to make your decisions about what you're going to do here when you don't know. And that fear is the biggest obstacle. So the way to manage fear is with tangibility or metrics, not emotions. We are battling emotions. So the only way to manage them that I have found is to know where an edge shows up. So let's take a look here. So this is our RTH open. And this is something I came up with many years ago. I'm going to share it with you. Now, the other part of this is, depending on your edge that you have vetted. I always say for developing traders, do not trade this because there's no structure and there's a lot of volume going to run through, a lot of volatility. So it has, at least what I have found, more risk than other trades that may develop. But always narrated because you want to teach yourself unconscious competence. So not only do you want to narrate this, but when you do replays, you want to be thinking in high volume. Volume is shopping. And this is a shopping experience. Trading is shopping. You know how to shop, you got the fundamentals of trading. The difference is the store doesn't change its prices. Here, the prices are changing all the time because it's an open auction process. It's a real-time auction. The store also uses auctions by putting things on sale, but they don't change the prices that often. So it stays on sale for a while, and then they put it back to retail. Here, retail changes along with everything else. So you've got multiple things. So what's too low, what's too high, what's fair? Well, if fair is changing, then we're still going to look for too low, too high in relation to a changing retail price. So all this is different time frame from your supermarket. How's that? That's trading. Now you know about trading. Not about the psychology, about trading. Opening swing low. Let's label this thing. And it's important. And why is it important, you're going to say? Well, because if I get these buyers in here, there's going to be stops under these guys. Now, remember I showed you the higher time frame, and I says, and I always say every day, I don't know if I did today, the market goes up to go down and goes down to go up. What it does is, in all time frames, if the market goes up, there's going to be stops from these buyers. If the market goes down, there's going to be stops from these sellers. So if the market goes up, there's stops under here. The market goes down, there's stops over there. The market goes up, there's stops under here. The market goes down, there's stops above here and under there, right? See it? So if I understand that, am I putting my stop there? Am I putting my stop there? Well, unless I have an edge doing that, no way. Because that's what retail traders do. And we know the failure rate is substantial for retail traders. So think like a retail trader. Don't act like one. Think about it. Say, I want to put my stop there. Who makes that decision? Do you make it? Or does FOMO or fear of loss make that decision? That's Hyde. I call him Hyde, Jekyll and Hyde. Hyde's the lunatic who is risk adverse. In our business, we are taking risk. We can't avoid risk. So if I'm still trying to avoid risk because I'm thinking about open trade equity, not structure and trade management, because I haven't vetted it, then I'm just going to end up most likely like everybody else who does the same thing. So let's learn from our experience. Let's not keep repeating it, right? Who is it? Einstein said definition of insanity, right? Keep doing the same thing. Well, I think we can stay insane a lot longer than we can stay solvent. What do you think of that? So opening swing low. This yellow line is the developing retail price. And all we're doing is measuring volume. Volume is your can of tuna in your store. This is the retail price. If the retail price moves up, it is saying, it's language now. This is a foreign language. I don't use indicators. What am I doing? I'm reading the shopping, the pricing. If this is the retail price, and this starts at 0 at RTH open, so the volume comes in, and I move away from it, it might mean, remember, maybe's the best you got. This is too low. If my retail price shifts up to here, that's the new retail price. Two possibilities. You're going to love this. It either goes up or down. I know. Eyes rolling back in your head and your chin hit the edge of the desk. It can go up, too low, like it did here. Too low, it goes up. Here, shift up, it goes up, or it breaks down. If it comes under here, it's too high, then what might we check? Is this really too low? Yes, it is. What is that setup? Along to where? To here. Because it was too high in the micro. And you can see it right there. So that sets up a long. Now I know this is too low. Now I move higher. What does that tell me? Well, too low. So if I get above it, after I test down here, I break above here. Now this is my support. 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 And it happens to be mid and VWAP. Who knew? Still longs. Where's my support? It's there. Same trade, right? Now, anything can happen. Now, don't forget, opening swing low. Now, oh, I forgot one other little thing. ETH high. What is the probability? I'm going to try. I always try to race along, and I always want to apologize to you guys because I'm trying to multitask and go through this quickly. But if I don't go through it quickly, we're going to get stuck before getting to the things that are interesting. There's almost an 80% probability that we get to the ETH high. Let me ask you a question. If you took this trade, wherever you took it, here, would you be using this with that kind of probability? That would be your scale. Or, subject to your plan, your scale's just getting risk neutral. And then you hang out, your stop is under the trade failing, and you're going for this, and you can keep going, or whatever happens, happens. It's just a trade. Nobody knows anything. What's this? What's that? Opening swing low. Huh. Gee, what a surprise, Tom. So, longs, structure, target, break, long continuation trade on the pick of the opening swing low, looking to come back. And this is called mean reversion. So it'd be outside, and you're trying to come back here. Right here, and this is the trade. This is a long for me, and it's not a recommendation. It's just a trade, nothing more than that, to here. And then the idea is to come out the top. I know my sellers are here, and over here, again, these are not recommendations. I'm just going to say is I'm going to share with you a thought process, not anything more than that. Doesn't mean it's right for anybody. If I have, think of it this way. Let's say you're trading and you're coming up to a previous high of the day in an RTH, so a daily high. What do you think about at these highs? Do you scale in front of it? Do you wait for it to take it out into what it might be stops? What do you do? What do I know about this? I know that I have my icebergs. I know this buyer was absorbed. I anticipate the possibility, and that's all I got, that sellers might show up here again. I don't know if they will. That, part of the thrill. So there's going to be stops above this swing. I know that. And I know since this is a structured long, I picked the stops. So that's part of my plan. If I get the weak early buyers out, and now I might get some sellers, the buy stops are in this leg, the sell stops are in there. So I call that fuel. So if the market goes up, I got stops from these guys. Where are their stops? Low of the day. Going to the moon, Alice. Well, maybe. I come outside, I pick the stops, and I get buying here. I get selling. Why didn't the market go down? Because I got passive buyers, icebergs. Notice the liquidity, and I get buyers here. No clue. Okay? Now, how do you get into this thing? Well, subject to your plan, you get long here. This is a long. Or you're sitting here with your jaw on the floor. Here, too high, bounce, shift down. What is this? And where is it in relation to what happened before? Take a look. This is support. So outside, everybody's thrown under the bus. Trigger, support is here and there. Sweep, counter rotation, long continuation, scale, anywhere, and then out the top. Okay? That's the trade. This sets up a bit of an issue right here. We break under the opening swing low. Now for me, and I'm only talking me, and I should say more like for developing traders, once this trade is over and we don't regain, and this was the stop pick. But once we come outside, then if you're taking longs, you can still take them, but you have to understand that we're now in two-sided trade. So this is okay for a long, but it's now mean reversion. So I was still, for me, thinking longs. Okay, you can kind of see this is another long, mean reversion, looking to come out the top. Same trade, okay, same thing. Sweep. Now this turns out to be the high of the day. No clue. So for me, no idea. Now again, this is pretty aggressive selling. So what do I have? The buyers took a shot here, not so much. Buyers took it again here. We're still in balance here. So for me, it has not changed. Now this is full session VWAP. For me, I was looking at this as a long in alignment with the liquidity to come here, still main reversion. This is a key location. So I was looking at it. Let's look. I get my sweep. This sets up a long here for me. And the idea is to come here, get through here, and come back there. Same trade, same as there. Outside, pick these guys off. The thing that is a little uncomfortable for me is the fact that we're having a hard time. But I only know something in hindsight. This trade would be a stop, okay? Right here, this sets up the long. The entry would be here. You'd take a stop here, or I did, and then I'm still above this. So then I'm above the overnight volume point of control. This is really my over-under for me for the whole enchilada. So because mean reversion happens in multiple time frames or fractals, if you will. So I know that this is the current retail price. In the ETH, this was the fair price. So if I find too high, which maybe I have, and if I take out this, then my last location is going to be here or ahead of it in this area. I get the sweep, same structure. It sets up another long for me. There's my test. So watch. Another stop. Okay. So right now, for me, now all longs are over. So what does this do for me? Break. Now what? I'm under this. What is this? A sweep. Where was my last area? It's here. This is where everything goes south of the border, and now the barge is turned around. Now, then, here. So this is a short. It is what it is. Now, we get under this. Naked VPOC. Too high. Same as this. Too high, too high. Going through the singles. Everybody's running for the exit. Thanks for playing. We're going to send you a coupon. Now, next target is 70. So these are just now shorts. Let me show you how to work this now. What is 70? It's a higher time frame version of the volume point of control or the naked volume point of control. This can be a short if it's in your plan against this, because it's a target coming down and also a potential short. Pull back to this and to this. 9:30, we have something called the IB continuation trade. Let me give it to you. There's over a 98% probability to take out the first hour's high or low, and I suspect, just like you do, that ship has sailed. So what do we got? This. Now there's another trade. Let me get that out of it. That's old. There's another trade here it's a structured trade called the IB continuation trade. And it's a structured trade, and it's available to you in those 60 PDFs in the Trader Lab. So let me show it to you. So we know the market's in liquidation now, right? There's no longs unless you're a counter trend trader. And for me, just talking about me, I prefer to trade from a barca lounger. So what I do is I trade for, again, I'm not recommending this, I'm just saying it just suits me, is I do take stops. Everybody does. You do, me. We all have to get over it. It's overhead and cost of production. But how do I pay for those stops? Because I trade larger rotations. So I'm psychologically okay with probing the market. And if I get off sides, because I don't try to pick the high or the low, I just define change. Now, I can trade counter trend any place, but for this stream, I'm only talking structure that you can make into a process. So, and I'll give you an idea how that works. When I build trading systems, I build conditional statements. So it actually created a process. So if this, then that. So if this is true, then what? Well, if I take out the overnight volume point of control, then what? Then south. If I get to the overnight point of control and it holds, then what? North. So if overnight point of control holds, if this, then that, north. If overnight volume control fails, so it doesn't hold, so if not, then what? South. So that's the condition. So you can define change in a conditional statement, and then you can create like a schematic or branch logic of what you do when these conditions, as you define them, change. And then you have your trade plan. So now you'd be off longs, unless you're counter trend, and then you'd be only taking counter rotations to get short, as opposed to when we're on the long side, taking counter rotations to get long. I refer to it as turning the barge around, and that's what it feels like sometimes. But once you're under, so this IB trade here is a structured trade. Now, 70 is an important level, and this would be a target coming down. So, but if I take the IB continuation trade before I get here, and it sets up right here at 9:30, the first hour is called the IB in the profile world. So if I get this and I have the IB low, first hour's low, I have a 98% probability of taking it out. If that's the case, I'm only going to be looking for continuation shorts, and then I'm looking to scale here and then continuation. This is the IB continuation trade. I'm going to try to show you the entry. Now, there's a few ways, again, you can do this. If the market's doing the Acapulco cliff dive, you don't have to wait for it. You can actually trade into it because it's a 98% probability. So let's look at some of these. What do I know here? I'm taking out this liquidity. My sellers are here. My sellers are here. This is too high. This is too high. My sellers are here. This is, again, I'm staying below these swings, and I have this. So I'm going to draw a little box here just in case. Never know. So what I look at is those consolidations. This is the same thing I was talking about earlier when I was giving you an idea of how consolidations work or these auctions. Consolidations are auctions. That's all it is. And it's not complicated. And when you use the volume profile, what you're really doing is you're looking at the consolidation. So what is happening in this consolidation? It's just a way to look at it. This is the sellers are there. There's the buy stops. Thanks for playing. By the way, a little trick. You guys will appreciate this who are indicator bound. It's the only thing I use from indicator world because I don't use any indicators. Is this. When the market goes up, is it buyers or buy stops? It's a great question because we won't know. So it's not knowing, it's anticipating. So what I see going on here is the shorts in this leg. Remember, micromanagers, retail traders, what do? Oh, their stops are out here and their stops are here. Their stops are here. When I come up, who are the buyers? Buy stops, 67. in this little leg. And then what happens up here? Now all of a sudden I pause. I've got sellers here. I've got sellers there. How do I know there's a seller there? Because the market didn't go up. I got buy delta. Who are the buyers? Stops. What is this? Stop divergence. Higher price, less. You guys know divergence. Well, if I have buyers, are they initiators or are they just shorts being squeezed out? That's a different buyer, isn't it? That's why this is so important. I see the divergence here. Now, I don't know until I come down here. So now I have my stop divergence and I have buyers here, but why didn't it go up? You see the buy delta. I'm spending time here because this is how you read the order flow. Now, it's not clear until hindsight, so let's not get carried away. Still got shorts warning here. This is the sellers. This is the buyers. The red delta, buyers are there, buyers are there, buyers are there, sellers are there. So absorption there, absorption there. Red delta doesn't go down, buyers. Green delta doesn't go up, sellers. Absorption. Icebergs, you see, they're on both sides. Break here. This is your micro VPOC. Depending on your skill level, this is a short or you don't have one. Now, we are going for this, 930. It sets at 930. I'm just telling you what I do. It's not a recommendation. I anticipate behavior. What else do I know? I'm below this single. Another conversation for another day. Break low, IB, pull back. So I have this as resistance and I have this as resistance. Why might this be resistance? You're going to ask me, Tom, why is that resistance? Now, I'm slicing this up so you can see the structure, not anything else. Why did it go down here? Well, I got my sellers, my sellers, my sellers. Okay, south. What was here? Wasn't it buyers? Well, and what was right here? Isn't this the volume? Where's that volume? It's the same as that, except it's from the other side. So resistance, support. I don't know, right? Do you? I don't know. Break low. If I break low, what was support can be resistance. And I've got 98% probability, and then put your helmet on. Where do I come? Look where I come. So let's look at the structure. So I have a buying structure, and this is the same concept you're all familiar with. Buyers, sellers, what happens? If I have a seller here, and I have a buyer here, and I break below the buyer, then this, which was support, becomes resistance, becomes resistance, becomes resistance. And then I have the IB continuation trade, break here, and if it pulls back here, I have another short. There it is, another short, another short. Remember the 70, right? Let's watch. Where do we come? What's this? Now, subject to your plan, and I'm getting a little advanced on you. I don't mean to do that. This is our, here, let's come back here before we get here. This is our IB. This is an outside edge, that low volume node. What I know is I got stops here. I got stops here. I'm going to have stops here. Remember, the market goes down to go up. So if the market goes down, I'm going to have stops here. Okay. But where's my outside edge? It's here and there, low volume. Okay. So I know that. I don't know how far it'll go. I do know this high volume is resistance. Let's just see what it does. This is a trigger. You might not be able to trade this, and that's okay. You don't need to. I'm just showing you structure. Some traders in Trader Lab, this is a trigger. Let's look at it. Now, what do we know about this? We don't know what it's doing, right? What about this? Sellers are here, buyers are here. Trigger. right? High volume is here. Where's my location? It's out this outside edge. It's up here. I come up here, I break again. Now, this is your micro high volume structure. Let me draw a little line for you. I'm just showing you a way. Break. The buyers are there and there. You could see them. But where are the sellers? Here and there, of course. Break low. So where's my outside edge? It's here and there. So I could be selling this, put a stop over there, and then you got to get risk neutral, and then you're just coming back down this way. And now you have this, a sweep, which suggests counter rotation. And then yesterday's low. And naked VPOC, 50. So the trade for this, going up from the IB, nice trade, is into the stops under yesterday's low and this. So this is kind of where you're looking to go at some point. Not a recommendation. Let me come back now. Let's look at the structure now. Now this is current. Where did we come back? Let's look at our structures. By the way, VPOC migration. Where did these come from? Notice this. Watch. And remember this, and remember this. This is a potential short right here. There's a sweep. There's location. I'm not paying that. What about here? I'm not paying that. Get out of here. This, up to you. This structured to there, mean reversion, and then you're looking for it to potentially, we're still looking potentially for this, but may not. You know, already got the stops. Remember how the market works. Market goes up to go down, goes down to go up. So now we're current. I appreciate your patience. I hope you got something out of this. I really don't like having to speed around like this. How we doing? Please give a like if you're visiting in YouTube. Do you guys have questions? How we doing? Everybody conscious? I have to turn some levels on here. Ben, how do I read icebergs? If I see large icebergs, look at this, 1600, 800, 500, there's some serious selling going on here. I look at the icebergs, but the icebergs are in hindsight. If I return to an area, I'm already aware. And if I'm really looking at the delta, because what's going to happen here is I'm not going to know about this. I mean, I understand what's happening when I see the market break. I know what happened here. First of all, I have a sweep, which alerts me possibly to a reversal. And it's only maybe, just like this. This sweep suggested this. This sweep suggested that. That sweep suggested that. But what about these icebergs? Well, they're ancillary. It's what was there. Another way to look at this is, why didn't the market go up here? Ben? Because there's passive sellers in here. So, and remember, we're talking about our little stop divergence, little trick, right? 24, 8, 2, 12, 4, and now I have my location. This location was created way back to the left, right? So I already know. That's why I draw these little things on my chart. So I don't forget where the opposite or opposing side interacted, checked the price, and rejected it. So the idea is the sellers that were here before, if the market comes back to them, are they going to sell it again? I mean, we don't know the answer. The best you have is maybe. But if I know there were sellers, then when I come back here, Ben, I get my stop divergence. I'm at a location and I don't know here anything, but what do I know? I can sell this here or there. Okay? And then where am I trying to go? There, mean reversion. This is the primary trade that I share in Trader Lab. If you can operate in mean reversion, which is outside in trading rotations, I believe if you vet it and you understand where you have a trade and only trade where you have a trade that's vetted, that it gives you an edge, and you have enough range, in other words, it meets your qualifications, you can do this all day. And you'll take stops with all of us, join the club. But if you have an edge, in spite of the stops, as long as you have the range, if you take a short from here or wherever, here, and you got to go there, that's not terrible. What is that? A 5-7 point scale. And then you hold trade management. And so the idea is if this is too high and this is too high, then the possibility is to check what's too low. Now, maybe we did. See, that's the thrill. This we got right here. So this is the possible target. And we don't have to ever get there. You could just trade the rotations if that's your plan. Manage your trade, take what the market offers, be thankful, move on to the next trade. And you just sit in your Barca lounger until your trade shows up. I got to turn some levels on, guys. Monty. Hi, Monty. Oh, Louis with the one lot. Hey, hi. How do I add HVN, LVN? Go to bookmap.com. It explains cloud notes and custom notes. It depends how you configure it. So it's not a one answer. If you have, I use Investor RT, it exports levels in real time. So, which I just put it on because I don't want these levels, which are real-time levels, when I'm going back. Now we're in real time, you're going to see them show up. High volume node, you'll see wherever these high volume nodes are based on the sensitivity, and you'll see these outside edges, low volume nodes. So it's almost like outside, back to the mean. So mean reversion, underlining the term mean, because what's mean is where's the outside edge, right? So that's why I developed structured trades for myself and also for traders in Trader Lab. The idea of a structured trade is you can build this structure and then reverse engineer it. And then when the market comes to your trade and the qualifications of the trade are met, which is location, there it is, sweep is a piece, trigger is a piece, to there for a scale, and then wherever, right? It's a little too sensitive. Let me adjust that, guys. Anyway, I hope that makes sense. Hold on, I got to make some adjustments here. Okay. Sorry. What I'm doing is I'm adjusting the sensitivity of these high volume nodes, low volume nodes. They'll update. There's too many. So this is showing every little, bump. And these are all legitimate micro auctions. So this is the fair price here. Well, if I'm above it now, it's too low. This is the developing volume point of control. It's the highest volume so far for the day. This is the new retail price. So what it's telling us is we found too high at the moment. And, as I mentioned, this might be the high of the whole move. But it's not my job to say it is. My job is not to be concerned about that. But the trade, what's right here, right now, because I'm a day trader, what's right here, right now is we found too high, and until we find too low, we have found too high. And if I found too high, I'm now taking structured trades for continuation shorts, and I'm using a process called mean reversion. And the reversion trades are the most common behavior. If you can master mean reversion, it's one type of trade. I believe, because the market most of the time is not a bullet train. It's a rotational process. So the market does this. It's always doing this. Now, if we get directional, you'll find the same behavior, but the range expands, but the process doesn't change. So what is the variable in this? Consistent process, edge, knowing how to manage the trade, where the trade might show up, taking your risk, taking your stop, or putting your trade on, getting risk neutral because you have a trade management process, which you can learn in TraderLab, then scratching if the trade comes back and violates structure. If not, you're hanging out. And then you vet for yourself in your psychology a trade management process. Are you going to put your stop right here? Or there, actually. Are you? If you put it here or here, you have the closer you get, the more you're getting in the noise. The market has a tendency, it has a harmonic rotation. It's just noise. The market rotates. However, if there's no longs, for me, at least TraderLab, now what I do is not material. I do things you guys would probably think, no. But 46 years of doing this, I have many other ways to operate. But for developing traders, you never have to go beyond one structure that you can make your own. Now, I know you guys love indicators. I spent most of my life, probably, not really, but a good part of my trading career, developing career, working with indicators or derivatives of them and then trading systems, which I thought would be a solution to solve the problem with indicators, optimization. So you guys all do the same thing. I just did it on steroids when I built systems. And I was also a fund manager, so it was a trend following position. So it wasn't no day trading back in the Stone Age. If you wanted a day trade, you either went down on the floor or basically, which is not day trading per se, or you would pick up the phone, call your guy on the edge of the pit, and wait for your, need hand signal, you get your fill right away. But so, and we didn't have the technology. So it was different, right? We didn't have volume, we didn't have domes. So you work with that. Now, you can work with it, or you could work with it, but that isn't where the dollars were. The dollars were in trending markets. So I traded trending markets. For me, short-term trading was when I was trading the big S&Ps, 2 and 3 day swings. That's the shortest I ever got when I was managing dollars. Because, at that point, it's about profit, and you had to have the swings. Also, the range in the S&P back in the 1980s, I don't remember, but I think a big day would be like a 5-point range or something in the S&P. So you're probably going, really? Yeah. So, but I can't remember. Too long. So anyway, no indicators for me, but range. So when I got into day trading, I had to change everything. But same processes. Okay. But the idea of the trading system was to solve the problem of randomness. So I thought optimization, which is what you guys do, curve fitting, you're doing the same thing. I just had to put it on a computer because too many markets, too many parameters. But the problem was I was always curve fitting. So I'd take a chunk of data, go back, optimize, and then do what was called walk forward testing to see how well it held up. Well, that's great, except you're using maybe a month's worth of data or a month and a half of data, and now it's all back. It's all behind you. Well, what about today? How do we trade today? Based on yesterday? No. Well, here we do. But on a month and a half of data? Not really. Not when it comes to indicators. So the fallacy of indicators is they're just price derivative, and they all have winning trades. Gamblers win hands, but the casinos play games that have an edge. They don't do anything else. So they do anticipate that they're going to pay the gamblers, and I anticipate I take stops. It's the same concept. So when you guys are solving for what your comfort is, that's predictability and certainty. squeeze that risk out. Very logical. I understand. Did it myself for too many years. The problem with this is there is no certainty. It doesn't exist. What do you do right here? This is where we're operating. If you were going to take a trade at the moment, there is no trade here unless you have a trade here. How do you feel right here? Uncertainty, fear. That's our primal wiring to protect us from the saber-toothed tiger. What's behind the rock? Well, I know there's always a saber-toothed tiger potentially behind the rock, but I know when certain conditions show up that I have an edge that there won't be the tiger. But if I have to make my decision here, I'm not going to do it there. I'm going to look back at what was too high. Now, the other part I know about this, where's the stops? There and there. I have another structured trade out here. So I have two possibilities. I have what's called VWAP to VPOC. It's a structured trade. The IB, we're now cruising around. This is called balance. And this is why mean reversion is such a key trade for Trader Lab participants and every trader to understand and to learn. When you learn it, of course, learning means understanding how it works and then vetting it, knowing that you have an edge and that you can execute it. That takes intentional practice, research. You got to roll your sleeves up. And then you roll your sleeves up, and then you come to market with a plan that has a statistical edge. You come to market with nothing, you're making it up as you go. Making it up is, then you have emotional triggers, chemicals in your brain. You do not make it up here. You bring your plan here. That was done outside of this condition. You've researched it. You've gone on sim to prove concept, because in sim, you're going to have to do it here. Research, it's easy to look back, right? So we need to be able to see if we determine we think we have an edge, then how close can we come when it comes to doing it in real time? What about this? What about this behavior? I know this was too high. Now, it doesn't have to stay too high because there's stops over this and over this. If I get into the fuel, which is what I call it, then I'm going to look out here, which is the next location. And then there's this outside edge. So all of this sets up the possibility to come here. Now, of course, we don't have to get there, and this is the last potential area. That's a short. And where is this? See this? It's all the same. If I come out here, I can look here. I've got alignment, so we'll see what it does. This short's not broken yet. It's still hanging in here. You'd be risk neutral, then it's your trade management. You wear a helmet. You'll either depending on your trade management, you'll get taken out and you'll get a few burgers and fries, or your stop is out here. If it never comes back out here, you got south of the border. If it does come out here, you'd get taken out and you're just looking to put it back out again. Not a recommendation, it's just the way you trade. A way to trade, not your way or anybody's. It's just a way to organize what you're going to do. The other thing about a trade plan is you know what you will do before it gets there. I know what I will do here. I don't know what the market will do. This is my sweep. Right here, I know I've got elements coming together. Right there. Now I see my sellers. That's a trigger. I get my sweep this way. That tells me counter rotation. Now I get another sweep. This says, put your helmet on, get short, get scaled, stop here. And am I going to get taken out? I have no idea. And instead of going, and this is our normal emotional response. I'm going to get stopped out. I'm going to get out. Now, what I have found for me, and I'm not saying this is for you, this is only me, is that I've gotten really smart over the years, and I bailed out of trades, and because I don't want to give back a point or 6 ticks or even 2 ticks. I've had those trades go on for another 10, 20 points that I'd left on the table to save 4 ticks. I don't know about you. I prefer to get taken out of the trade because it has to fail versus me making decisions on my fear of loss. And who is feeling that? The lunatic, the fight and flight. Is there the one who doesn't want to give up the food to bring back to the cave so we survive the winter? That's primal wiring. So we're always looking to avoid risk. So avoiding risk would be micromanaging, but I'm also then cutting off my opportunity. I'm in the business of opportunity, not limiting. If I get risk neutral, then the worst I have is scratching the trade. And if that happens, where's my outside edge? Isn't it out here? So then I'm looking to trade outside in. So it's not a recommendation. So if I get a structure out here that I can work with, I'm trading back to this, called mean reversion. So that's all this is all day, mean reversion. And you can have a bunch of trades. You'll take some stops, you'll get some scales, you'll have scratches, and if you have a plan, you'll have winners too. And hopefully at the end of the day, if you're able to manage your fear, your emotional states, follow the plan, try to stay detached from any individual unique outcome, you have the opportunity to create consistency. And nobody walks away every day with profits. We all take losses. Whatever can go wrong goes wrong, because that's the randomness. I hope that makes some sense. Are you guys tracking? What do I need to see to step in front of VWAP? Tom, I need a trigger. Zach, if you're getting chopped up, stop trading. Then you're not trading at vetted edges. Well, 4 scratches and a full stop is actually pretty good, Zach. The thing about it is, if you're getting scratches, then that's good risk management. You always got to look at your locations, and if you took a full stop, yeah, I think I've took a couple today myself. But that's not getting chopped up. That's something you can improve. Notice where we came, guys. Let's come back to structure. Now we have to watch if the volume point of control shifts. I'm getting an alert that says we're getting ripe. So what do I know? This is a short, right? There's your entry. This is another potential entry. Now the problem, and how do I enter this? This is the trade. I don't take the same trade twice because I know now. Let me tell you why. Stops are here. What's going to be here? Stops here. Shorts in this leg. Shorts in here. Stops are here. The best, I always say, what is it? The first time is the charm. So this is the short. That's the scale. This is now your support. I got to clear this and take this out. If I don't do that and we start motorboating up here, now we're going to squeeze. And all that does is set up the next potential short. That's just how I do this. I don't know what it'll do. I do know that this is where this trade fails. If I can get below this, then I'm, looking at this. If I can't get below this structure, this micro structure, right there. That's where your buyers were. You see them? So this is my micro support, and it's right. Well, you can go down. You can get down into anything like the subatomic electron microscope. Let me show you this. Now, this is not actionable. This is just language. Guys, you guys use indicators, and that's fine. Let's talk about what an indicator actually is. Isn't it a translator of price and some derivative? So that's what it is. What I'm doing is I'm not using those. I'm reading a language. So your indicators are just translators, right? So what I'm doing is I'm translating. I'm the indicator. I'm reading this and interpreting it. But because we're in a multiple time frame structure, I'm aware of the condition. The fact I might see a buy here is 2 opportunities for me. I can use it for trade management, or my stop is back at the original location out here. And now I know this is too high. But what else do I know? I got stops here. So this is vulnerable. So I have to be very careful here. This trade to work further needs to clear these micro buyers. So, and this, right? Now for the day, and the day, I mean, the low of the day might be, and I have no idea. Do you know? I don't know. I got the main target here, and this was too low, 50. It's still on the hit parade, and I have no idea if we're going to get there, right? Let me make sure I got the right level in here. I may have the wrong, that might be a stale level. Let me just check here again. 50, this. So this 50 is my target, and you see we just missed it. So what we did here is we came in this. So 50, there it is. So this is a little different, not a big deal. I'm not going to go into why it's a little different. This is the accurate 50. So that's why this, and notice where the low of the day is. I don't know, right? So not my job. My job is take the trades that align with my plan, try to stay aligned, and only trade in the direction, the overall direction of the market, which currently is down. And notice what we didn't do. We haven't gotten below here, and I'm in two-sided trade. This can easily come up. And remember where my next trade is, out here. So the question was, LVN, VWAP, yes, outside edge. The thrill of trading is, where is it? Is it there? Is it there? Right now, it's here. And there's no precision. So this is where mean reversion is challenging. I mean, as we say, there's no free lunch, right? So the only way we operate in this environment, at least for me, is I accept that I don't know what it'll do. I know it's 100% random 100% of the time. There's no way to predict anything. So I have to have trades that I've organized based on my understanding of how the market works. The market works by goes up to go down and goes down to go up. Market goes up to go down to go up. Market goes up, goes down to whatever it does, right? So what's in here? Buyers. What's in here? Sellers. If I can't get the sellers out, then the sellers are still taking advantage of counter rotations, and then we're looking to go south. It's not more complicated than that. What is complex for us is randomness. That's the thing that'll take you out of the business, because in randomness, you're operating right there. And think about what that does. If you're thinking of taking a trade, let's just talk hypothetically right here, and it's not, but let's just say it was. Fear, looking for certainty, risk avoidance, all that's operating. Looking for confirmation. Is confirmation in your vocabulary? It doesn't exist in this business. The best you have is maybe. So if you can't get confirmation, if you can't get certainty, then you have fear. Uncertainty is fear in this business because there's consequences. And your primal wiring cannot differentiate between a saber-tooth tiger and a stop. It responds the same way. What is going on here? Now, if we can't get down below here, we can squeeze. Remember where the stops are. They're there, there, there. So, trade management. When you come to market, you bring a plan to market. You don't make it up here. You already know what you will do, not what the market will do. So since we know we don't know what the market will do, you got to come prepared with a plan. And then I always look at it kind of like buying a lottery ticket. This thing going to work? I don't know. Of course, you cheer for it. Come on, ever talk to your monitor? Mine slaps back occasionally. But basically, it's like, let's go. And then your emotions start going. Oh, gee, I think I'm going to get stopped out. Well, no, look at that. It rotated down. You go from euphoria to depression in this time frame, right? We all do. Like, oh, sell it. Oh, it's great. I got my scale. What? Uh-oh. What's this? shorts are in here, shorts are in here. So all these guys, if these shorts get squeezed, then you're going to get these buyers, and it's going to take us outside. That's why the next trade's out here. And it's not a recommendation, it may never get there, right? I hope that makes sense. Final questions. I got a couple of minutes. Trading markets, when I get long, can I tell you? I don't have any longs here. So for me, it's only shorts. Not a recommendation. I'm going to say that because longs might be the smartest thing on the planet. But my plan, based on everything so far, is shorts. Long, you got a weekend. You just made an all-time high. We have an outside day. That is, as they say, coyote ugly. And we have to see how it behaves. So the market can stay and just rotate now. And that's what I anticipate. Doesn't mean it'll do it. It's not anticipating, doesn't mean anything more than maybe. So maybe we're going to squeeze these guys out. If they get squeezed out, I'm already looking for the next trade to come back there, and maybe out the bottom or not. That part, But this is called mean reversion. So all we're doing is trading the same process from different locations. Outside in, outside in, outside in. And then if you squeeze these guys out, which is whatever, then outside in. So no, long, not happening today. For me. And other traders may be taking long. No idea. Hope that makes sense. Does that answer your question? So how we doing, guys? Please give a like if you're visiting in YouTube. If you haven't taken advantage of Trader Lab, it's open to all of you. Doesn't matter whether you are a Bookmap subscriber or not. There's no cost for Trader Lab. Trader Lab's a community of traders who come together to leverage their collective experience. We have our senior trader has over 50 years. I've got 46-ish at this point, both professionally and out here with you. And there's the full range of traders. We have some very talented traders in Trader Lab. And of course, everybody is a developing trader. Doesn't matter how long you've been trading. What does matter is you're in this to build a business and you're not playing a video game. And I say that with all sincerity. We have compulsion and we respond to it. That's a video game. This trading is a business. And by the way, this is what the Trader Lab community looks like. There's a lot going on in here. There's also a library of webinars that you're welcome to. This one, start here. It's the primer. It's got about 33,000 views. It's a large community, and there's a lot going on. Data mining. There's a document section, and a lot of other great information. Not to mention the support, psychological support, and just we're all in this together, guys. Trying to improve, trying to create sustainability. If you don't have a sustainable process in spite of random winning trades, it has nothing to do, in my opinion, with you. It has to do with your process. Most of us try to fulfill our psychological needs, which is avoiding risk, looking for certainty. What happens if you're in an environment where you can't have that? Then you have to solve for randomness. If you're interested in understanding this business and maybe creating sustainability, I believe anybody can learn how to trade. Whether or not you can adjust to the actual business, which is gaming, is a different question. But if you haven't been successful in spite of random winners, which anybody can have, then you might want to consider using the link in the bottom of YouTube and take advantage of the Trader Lab. There's no cost. And again, you don't have to be a Bookmap subscriber. You won't be solicited. Nada. Please give a like on the way out. Remember, where's our resistance? Isn't it here? Interesting. Isn't it interesting how the market works? if you can understand how the market works, vet trade ideas. Now, this has structure, doesn't have location. The next trade, if it happens, and it's not a recommendation, it's going to be out here, come back there, and then helmet. Thanks, guys, for visiting Trader Lab today. Hope you have a great weekend. Appreciate your time and interest, and I look forward to visiting with you next week. Be well. Please give that like on the way out, and thanks for visiting the Trader Lab.